It's October 2025, and something strange is happening on the Nasdaq. Tech stocks are surging. Nvidia just hit 4 trillion. The AI boom. Unstoppable. Retail traders are back. The fear of missing out is real. But behind the green candles, something's off. The charts are whispering. The momentum is stalling. And the question on everyone's mind, is this the beginning of another dot-com style crash? Let's rewind. Back in 2000, the Nasdaq soared on dreams. Dot-com darlings with no profits. Then it all imploded, 78% gone in 2 years. In 2008, leverage brought the system to its knees. In 2020, it was COVID. Sharp, fast, brutal. And now, it's October 2025. Margin debt is at record highs. RSI is flashing overbought. And the Nasdaq? Sitting on top of the most overextended Kimoku cloud in years. Let's break this down. On the daily chart, the Nasdaq 100 just bounced off its baseline, 24,579. That's the line in the sand. Price is still above the cloud. Lagging span, bullish. But the MACD just flipped negative. Momentum is bleeding. RSI? Recovering, but stuck under 60. Zoom out to the weekly. Price is still strong. Volume just surged. The trend is alive. But the RSI shows a dangerous divergence. Price made a higher high. RSI didn't follow. And the MACD histogram? It's fading. Now the big picture, monthly. RSI is sitting at 76. That's nosebleed territory. The last time we were here, 2021, and we all remember how that ended. The Kimoku cloud on the monthly is thick and supportive, but price is miles above it. That means one thing, we're stretched. Let's talk about what's fueling this rally. Artificial intelligence, the new frontier. Billions in CapEx are pouring into chips, servers, data centers. Companies are hiring engineers like it's 1999 again. Nvidia alone added nearly $1 trillion in market cap in 90 days. Every hedge fund, every pension fund, every retail trader, they all want in. This isn't just momentum. This is narrative-driven price discovery. FOMO meets fundamentals. But fundamentals can shift. The Fed has pivoted. It cut rates in late 2024, again in mid-2025. But inflation, still sticky. Core CPI hovers above 3%. The yield curve is still inverted. Unemployment is ticking up. The IMF projects U.S. GDP will grow at 2% next year. Modest, but not robust. Europe is shaky. China is slowing. Add in a potential return of trade wars, and global risk goes up. Let's look at the technical risk triggers. On the daily, watch 24,580. That's your cloud edge. A break below, that flips momentum. On the weekly, 24,000 is the psychological support zone. Below that, 21,388, that's the weekly baseline. A close beneath that would confirm medium-term trend exhaustion. But here's the twist. Nothing has broken. The Kimoku structure is still bullish. Conversion is above base. Price is above the cloud. Lagging span is clear. The trend is intact. So why the fear? Because everyone sees the same signals. Volume is surging on green days. But MACD is fading. RSI is diverging. The market is climbing on narrowing breadth. That's how tops form. Quietly, slowly, then all at once. So let's zoom in on sentiment. Retail investors, surprisingly cautious. They've been net sellers on up days. Institutions, mixed. Some are trimming risk. Others are riding momentum. Nobody is all in, and that's the problem. No euphoria, no panic, just a drift. And drift in a late-stage cycle is often the setup for volatility. Let's talk scenarios. Scenario 1 melt-up. Fed keeps easing. AI productivity beats estimates. Market surges another 15 to 20%. Nasdaq hits 28,000 by April. Scenario 2, sideways grind. MACD continues to bleed. RSI stays in the 50s. Market chops between 23,500 and 25,500. Frustrating. Low conviction environment. Scenario 3, sharp correction. Fed hesitates. China retaliates with tech export bans. A geopolitical flashpoint hits headlines. Nasdaq breaks 24K, then 21K. Panic. Let's layer on some macro risk. U.S.-China relations are tense. Rare earth tariffs. AI chip restrictions. A single headline could unwind months of gains. Europe? Facing fiscal issues. France and Italy are in deficit trouble. The ECB is out of bullets. Middle East? Always a wild card. Meanwhile, margin debt is now over $1 trillion. That's real leverage. If price falls fast, we'll see forced liquidations. This is exactly how March 2020 started. Not with fear, but with leverage. So what's your edge as a trader right now? It's not prediction. It's preparation. Have a playbook. If RSI breaks below 50 on weekly, tighten stops. If MACD flips negative across daily and weekly, reduce exposure. If price breaks below the Ichimoku baseline on 2 timeframes, raise cash. But if we break above 25,000 on strong volume and RSI climbs above 70, that's a signal. Ride it, but stay alert. Let's not forget behavioral risk. Confirmation bias is real. If you're all in on AI, you'll ignore the warning signs. If you're perma-bearish, you'll miss the rally. Your job isn't to be right. It's to be objective. So what does history say? In every prior major top 2000, 2008, 2021, the warning signs were there. RSI divergences. MACD fades. Volume dry-ups. But the crowd stayed long. And when the break came, it was violent. Don't be the crowd. This video isn't financial advice. It's situational awareness. You're a risk manager first. So as we head into Q4 2025 and beyond, stay sharp. Monitor volume. Watch RSI. Track MACD. Respect Ichimoku. Know your levels. The Nasdaq could explode higher or implode lower. And it might happen sooner than anyone expects. Because markets don't crash when they look dangerous. They crash when they look safe. Now let's look ahead to January 2026 and ask the question few are prepared to answer. What if the Nasdaq crashes and earnings stay strong? What if this isn't about fundamentals at all, but positioning, psychology, and liquidity? Let's dig into the AI narrative. Is it a bubble? Or to the next leg of exponential economic growth? NVIDIA, Microsoft, Alphabet, they're not hype. They're profitable, cash-rich, dominant. But history shows even the best businesses get overvalued. Apple in 2000, Cisco in 1999, Amazon in 2021. Even great companies can get crushed if valuations run too far. Let's talk valuation. The Nasdaq's forward PE is hovering near 30. That's historically high. CAPE ratios are touching 40, levels not seen since the dot-com bubble. So unless earnings explode, prices will need to correct, either via price decline or time and sideways churn. Now let's imagine. It's March 2026. The Nasdaq is at 20,500. Sentiment is flipped. Headlines scream, Tech Wreck 2.0. What do? That's where your plan comes in. This video isn't about guessing the future. It's about recognizing when the present becomes unstable. If you want to survive in this market or dominate, here's your checklist. Price above cloud? Good. Below? Reassess. RSI above 60 and rising? Bullish. Falling below 50? Watch out. MACD rising with expanding a histogram? Strength. Flattening. Get cautious. Volume confirming moves? Trust it. Diverging? Be skeptical. And finally, don't get paralyzed by predictions. Get empowered by preparation. The market doesn't care about your bias, only your risk management. Now, take a deep breath. Rewatch this if you need to. And remember, the best traders aren't the loudest. They're the most prepared. We'll see you on the other side. When the candle closes, before you place your next trade, ask yourself this. Do you want to trade in the dark? Or do you want to see what the institutions see? With Insights Pro, you don't just get data. You get the full market X-ray, sentiment shifts, sector rotations, macro pressure points, and the exact technical level smart money is watching. Real-time alerts, institutional-grade signals, and frameworks built by traders, not influencers. Because in this market, edge is everything. If you're serious about staying ahead of the next crash, the next rally, the next rotation, then stop guessing and start knowing. Click the link in the description or the top comment to upgrade to Insights Pro today. Don't wait until the candles tell you what you should have seen coming. Be the trader who's already there before the move begins. Insights Pro, built for forward thinkers, built for this moment.